Nifty opens at a record high for the fourth straight day after Jerome Powell's comments spark a risk-on rally in global equities. Indices continue to hold on to gains. IT and metals lead while autos and FMCG see cuts. The broader market relative underperformer, the Nifty too, mildly off highs.
Bajaj Autos reports a weak set of numbers in November. The exports fall 30%, while two-wheeler sales are also down close to 20%. The management tells CNBC-TV18 that the higher base effect has affected sales, while rural markets continue to remain a tad bit muted.
Hatton Agro's board will meet on the 3rd of December to mull a proposed rights issue. Sanghi Industries too rallies on the news that its board will meet on the same day to consider a fundraising proposal.
Health Canada approves Shilpa Medicare's fourth facility in Telangana. The stock surges 8.5%.
You're watching us here on Chartbusters. This is a show where we talk about all the buzzing stocks. What's actually buzzing is the market itself. A fresh record high for the Nifty yet again. You know, the party continues from late last afternoon as well, even as the Nifty is mildly off highs, but that's no real problems because at 18,850 thereabouts, there's nothing really to complain, apart from the fact that maybe the mid-cap underperformance is something that we'll be watching out for. But that too has perked up in just the last few minutes or so. We have the mid-cap index at the high point of trade. Nigel, looking good.
Well, it's looking good to me.
Both of us. Let's put it both of us.
Absolutely. Well,
all right.
Market's looking good. Market's
yes.
looking good as we speak. But as expected, after the kind of surge that we saw yesterday, some bit of a pullback from the high point of the day. But the breadth of the market, that's something that I've been making this point, that I want to see the breadth of the market participate. And for the time being, we have more number of stocks advancing than declining. But you want this ratio to be maintained. So let's keep an eye on that front. For the time being, let's get a call on the index. We have Sachidanand Utekar who joins us. Hi, Sachi. Good morning. Well, we hit resistance at around 18,880 odd today. What's your sense? You look to buy the Nifty at some point of time at current levels or at a deeper downtake?
Good morning, Nigel. I think already, if you look at the structure, we have already seen a vertical rise. But so far, I think 18,800 is a dependable support. So until unless we don't see a swing below 18,800, I think the trajectory still stays on the positive side. If you look at the overall range for the day, I think 18,930 is where we are expecting some resistance. And eventually, we are seeing at the expiry shaping up somewhere close to 18,850, 900 kind of a zone itself. But I think if you're talking about breakdown or a pullback, I think that particular move will only unfold in case the Nifty spot starts trending below 18,800. When we look at Bank Nifty, I think the data is much better there. A breakout point is somewhere placed around 43,400, and probably the chances of a breakout looks brighter when it comes to Nifty Bank. So we are expecting a move to unfold above this particular level towards 43,800. So I think Bank Nifty is something wherein some trades can be initiated on the long side. But when we look at stocks, the rotation has been really healthy. Today, again, we are seeing a good, strong participation from the cement pack. And in fact, IT is also leading from the front. So when we look at the stock positioning, I think both these pockets are definitely providing some, setups which can be participated on the long side.
All right, a record high for the Nifty Bank, Sensex, as well as the Nifty, still about 1.5% away for the mid-cap index. So let's see when that comes about. Such individual stocks, what are you playing for today?
So Ultratech Cement is something that we have also recommended to our clients. The stock has been consistently creating higher tops and higher bottoms on the weekly scale. We have already seen a breakout from a bullish flag formation. Now, again, we are seeing fresh bouts of momentum. The 7,200 call writing zone has been breached. So we are expecting this particular momentum to extend towards 7,400 eventually. So trading longs should be participated here. 7170 would be the stop loss from a momentum perspective. The second pocket of strength has been IT. And we've already traded in a lot of IT counters since the beginning of this day. But I think L&T Infotech is something wherein a consolidation process is still going on. We're expecting a breakout above 5050 levels, and after that we may see a good strong momentum play. So we are expecting a swing towards 5185 on the higher side, longs can be initiated in L&T Infotech futures. The stop loss should be placed at 4985.
Okay, all right. Thanks a lot for that, Sachi. Well, time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Sharma joins us to run us through a stock that he's tracking rather closely. Nitin.
Cyan's second quarter result was mixed and was below the street expectations. Revenue growth of 11.7% was led by the aerospace and communication segments and broadly offset the decline in the DLM and rail transportation businesses. 200 basis point slip in the EBIT margin over the last year was due to exceptional items including a legal charge in US and one-time M&A expenses. Order booking of $247 million was highest in the last 10 quarters. Out of the 5 deal wins, 4 were from services with contract potential of $105 million. For FY23, Cyan management has retained the organic revenue guidance of 13 to 15%, inorganic guidance of 14 to 15%, and the margin guidance of 13 to 14%, and a FY24 EPS target of Rs 60. IT sector has seen derating in the last few months on the global macro sentiments, and valuation remains expensive. Cyan is, however, an outlier and is still available at a reasonable valuation. At the current market price, stock is trading at FY24 PE of 14 times, along with a 3.5% dividend yield. Investors can add the stock for a medium to long-term investment horizons.
All right, Nitin, thanks a lot for that. With that, we'll step into a short break. On the other side, we get chatting with the management of Ethos. They have, if you're watching us here on Chartbusters, as promised, let's get chatting with the management of luxury watch retailer Ethos. It's entered into 2 partnerships right now. One is with a Swiss watchmaker, and the other one is Trilobe. We'll get chatting about the company's business prospects with these partnerships, etc. But let's get a few details out. Mr. Sabu, thank you for joining in. Just 3 questions to start with regards to these partnerships. One, what do these ranges start at? And for the European brand, how do you pronounce it? And thirdly, most importantly, how many watches do you intend to sell initially?
Right. So, Spiac Marin is actually it was founded by a Britisher in UK, and now it's been taken over by a French lady who's a very passionate watchmaker herself, Christelle Rosnoble. This it starts their initial range starts at about 12 to 13 lakhs. It goes on for their specialized watches all the way up to 50, 60 lakhs and more. But these are extremely specialized watches made in small quantities, very much sought after by collectors. And I'll tell you why it's important to bring these brands to India, even though the quantities that are going to be that we're going to sell are not going to be very high, because the production of these specialized watches is in a few hundreds a year worldwide, right? And they're produced by very specialized watchmakers based in Switzerland. Trilobe is another similar brand founded by a very passionate entrepreneur. And Trilobe actually won the Petit Aiguille Award at the Grand Prix de Horlogerie in Genève last month in October. That's a very amazing achievement for a relatively new watchmaker. And their watches are very well known for the customization that they do. Again, a small production worldwide, very much sought after by collectors. Why I think it's very important to bring these brands to India is that in India, the tradition and the passion for watch collecting and to collect watches made by specialist watchmakers is growing. And this is part of the whole culture of understanding the world of mechanical watches, where they are really purchased as collectibles to last for decades and generations, rather than only functionality of telling the time. And the price is really a function of the innovation in design, in the technology which they use in producing the specialized movements, and of course the uniqueness of the story behind it.
Right, we take that point, and suddenly for a moment, both Nigel and I felt that we are on a French channel as against an English TV channel. You know, Spiac Marin is how you pronounce it, if I got that right, and the other one was a long award that he gave. But Nigel, importantly, 13 to 15 lakh rupees is the starting range.
I just called for a chair, actually. You know, that is very, very high prices. But as you said, they're custom made and they're collector's items, we are using it on a day-to-day basis, so no collector items for us. But
You are interested in buying them, aren't you?
Mangalam. All right. Well, let's get back to the conversation, Mr. Sabu. Mr. Sabu, but the stock market perspective, they'll be looking to see what kind of targets do you have in mind for both these two brands you just spoke about. Some kind of a revenue incline, some kind of a quantity that you're looking at. Maybe not in the coming year, maybe with 2025 in mind. Do you have a broad number that you're looking at in terms of business?
Also for building up a collective portfolio of brands that appeals to a wider group of watch buyers and collectors. And many of these are emerging brands in the universe of high watchmaking. And they're very interested to connect with Indian collectors. And we know that Indian collectors follow these brands which win the Grand Prix prizes in Geneva. And therefore, it actually it starts to complete a collection of watchmaker brands that Ethos is putting together for Indian buyers. They no longer have to go to a Dubai or a London or a Paris or a Zurich to pick up these. They can pick up these in India itself. The volumes will be low. I mean, they make only a few hundred watches a year. So we will be very lucky to get an allocation of, more than 20, 30 watches in a year. And there is a market for much more than that. But much more than the value it's going to add to our turnover, it's the value of the portfolio of brands that Ethos is putting together.
Point. So even if you get 20, 30 watches every year from both of these brands, assuming relatively higher average sales price as well, could not be more than about 10 to 15 crores in terms of additional revenue. That's at the upper end. But, just wanted to understand, are your margins on these partnerships a lot more than the others, primarily because they're exclusive? You had intended to increase your exclusive brands as a proportion of your sales from 26% to around 28%, and going forward, say over 30, 35 odd percent as well. Any inkling on where do you end this year with and maybe the next year?
I think this year we would be in the 28, 29%.
Right, I think there was an audio glitch out here. We'll probably try and repatch that connection with Mr. Sabu. This year will be around 28 to 29% from about 26, 27% what it was earlier. The long-term target for the company is to take it almost up to 37, 38 odd percent as well. But Nigel, a couple of 20, 30 watches which are being sold every year in India, he expects them to be sold every year. The average selling price, I mean, if the range starts from 12 to 13, the watches that someone like you would like would not be any less than 20, 25, right? So, I mean, that's just telling you how big the luxury market in India is.
You know, Mangalam, how practical I am today, right? And you hear about it all through the day. So that's definitely not in my range. But yeah, I mean, there's a big market out there. Collector's items, as you said, we make to, you're ordering specialized watches, tailor-made for you. Wow. I mean, people have, I think the urban India is doing pretty well.
Yeah, I mean, I get a lot of things tailor-made as well, but they're definitely not watches, the shirts, etc. But you know what, Nigel, it's interesting because when the Mercedes CEO says that SIPs are eating into Mercedes sales, it will be good to hear, are SIPs eating into watch sales or not as well. But we'll just try and repatch that connection with Mr. Sabu. For the time being, just keep an eye out on the markets itself. The mid-caps are doing well. Okay, we have Mr. Sabu back again with us. So, Mr. Sabu, you were saying that you aspire to end this year with 28 to 29% in terms of exclusive brand sales. Going forward, what's your target?
We believe over the next couple of years, it should increase to about 35%. And it's true, we do enjoy greater margins on exclusive brands. So it should help in the overall weighted average of gross margin. But as I said, completing a portfolio of independent brands equal to the best retailers in the world, that makes Ethos one of the best as well. And that's very important for our strategy.
Okay, all right. And any upside to that target that you had of 35% growth this year? Also, the average selling price per watch, that'll get a bit of an uptick, right? Because these watches are far more expensive. Even if we sell in a few in a year, it'll help the overall average. So where do you see that number headed, average selling price per watch?
Yeah, so the average selling price has moved from about 75,000 to now about 1.6 lakhs over the last 4 years. We expect it to continue to go to increase, but not in the
All right. Seems like we are out of luck when it comes to keeping a safe, smooth connection with Mr. Sabu. No, we'll try to, speak to him on another occasion. But for now, we have the fact that he's holding on to his revenue guidance, 28-29% exclusive share coming in. These are higher gross margin business, primarily because it's exclusive brands as well. And they're also looking at, increasing the average selling price.
Well, that's right. Bottom of your screen, Finance Ministry has proposed issuance of composite insurance licenses. So the ones that are, not doing both the businesses as now, they can do it, just general as well as health. Star Health, I think, came under some pressure. I think they have a foothold in the healthcare business, and now that maybe could be enhanced competition that comes in there. We'll try to get further details on that. But LIC clearly is reacting positively as we speak. It's something that we've been talking about for a while now, and been asking this question to a lot of the insurance companies that join in as well. But for the timing, clearly LIC, well, that's moved to the high point of the day. Slip into a short break, come back. We'll try to get you more details on this front. We'll also track a couple of stocks that are moving around. Tuned in Chartbusters, you're on CNBC-TV18. Well, let's focus on a couple of stocks that are moving around. Remember, yesterday we had the Kirit panel that spoke about the liberalization for the gas sector. But before we get to that, Sonal is joining in to tell us more about that. Well, Sonal, Mangalam and me were just having a chat with the management of Ethos, and they were talking about Spec Marine. I'm sure you listen to Spec Marine. Today is both of you guys' big day. So first of all, wishing you all a very happy anniversary.
Thank you.
3 years celebration. And I'm looking forward to the treat later today. But it's going to be a good day for you guys. But make sure you get that watch, Sonal. Don't let him go. He's asked about all the details.
I'm putting that on you. You have to ensure that I get it.
I ensured you all got each other.
Oh, yes, you did.
All right, let's talk about the gas space then. Tell us what a brokerage is making of the recommendations that came in yesterday.
Well, yes, the recommendations by the Kirit Park panel are considered very positive. And this is something that we spoke about yesterday as well. The brokerages are of the view it will reduce gas costs for all these city gas distribution companies. Morgan Stanley calls it a path to liberalization, and these proposals would be positive for upstream companies as well because it will be determined by the markets. Gas price liberalization is positive for both earnings and multiples, which were suppressed for all the gas companies in the country. CLSA says that new gas pricing recommendations positive across the value chain, be it IGL, MGL, Gujarat Gas or ONGC and Oil India. Cabinet, of course, needs to take the final decision. This would mean a cut in gas costs to the tune of $2 per MMBTU, which should still be positive for gas producers like Oil India and ONGC, because right now these costs are factoring in valuations of around $2 per MMBTU, and their break-even cost is around $3.50 per MMBTU, so it's still higher than that. Such a cut in gas price may raise discount of CNG to diesel by 30 to 40%, which is another positive for CNG. Citi says that it is a significant positive development. It would bring down input costs of APM gas by $2.1 per MMBTU, and these changes, according to Citi, has a potential to reverse years of underperformance. IGL and GSPL are preferred gas picks, followed by MGL and Gujarat Gas for Citi.
All right, Sonal, thanks a lot for that. So that's about the gas prices, but let's talk about the auto sector as well, because it's the first of the month. We do get all the auto sales coming in. I'm looking at two stocks, the two numbers which have been reported so far, the two major numbers. We have, gotten some VST numbers as well. But as far as Bajaj Auto is concerned, weak numbers, because the total sales at 3.06 lakh units compares to the CNBC-TV18 poll of 3.42 lakh units. So it is a miss out there. And the miss largely has come in on account of exports. The domestic sales have fallen just about 4% year on year, whereas total exports have fallen 30%. Total two-wheeler sales, as a result of which, have fallen about 23%. But the one stock which is spiking as we speak and has moved to the high point of trade is Escorts Kubota, because as a result of their first month sales that we've gotten for November, 12% jump in their total tractor sales, 8,000 units almost, and domestic tractor sales have actually grown by 13.5%. Exports have declined by about 3.5%, and domestic tractor sales going up for Escorts is a big positive, because most of the street was working with some muted growth in the tractor business for the overall industry itself. And for people like M&M as well, the expectations were no more than just a 1.5% sort of growth. And for them, growth would be led by passenger vehicles. But in light of that, if Escorts had grown about 12%, that means they have gained some market share. So Good going for Escorts, not so much for Bajaj, though management did say that things are bottoming out here.
Okay, all right. Well, on that note, though, we'll have to wrap up on this edition of Chartbusters. We're going ahead. Mangalam's giving us a treat, but you stay with us because Trading Hour comes up next.
You know, it's my work anniversary and my wedding anniversary together.
Oh, wow.
Brought to you by Big